Hi again, Ilir Nina, CPA from Boise, Idaho. This is our second episode on tax resolution series, and we're going to talk about understanding tax debt and IRS collection process. We're going to talk about how the IRS collects paid taxes, common IRS notices, and also we're going to be talking about common mechanisms that IRS uses to achieve its goal of collecting the taxes. When somebody owes taxes, those come as a result of taxes that you filed, either current and back taxes, as a result of an IRS filed return, which is called substitute for return. And also it can come as a result of an audit where IRS made changes and now you're being sent the notices. The notices are in the following sequence. The initial notice, it's the notice CP14, which that says notice of owed balances. And that's the first notice. And the second notices that come in are the CP notices, which are, they mean computer processing. This is a computer communicating with you rather than an actual IRS person. They're CP 501 and CP 503. To the end of that sequence, there is a notice called CP 504, and that is a notice of intent to levy, but it's one of the lowest on the towing pole. Then the most serious notices that come later are LT 11, which stands for a letter, and this is where actual IRS agents are involved in this process. And then also there is the notice CP090. So what are your options? When you receive these notice types, you need to contact the IRS immediately, or there is an option that you can file a collection due process hearing that if you have a good reason, you need to appeal their decision, so you can talk to an IRS agent, an appeals officer, and try to resolve or bring up mitigating circumstances. That's a separate process that we could talk about it later. Now, how does IRS achieve their collection goals? They achieve it through liens, levies, garnishments, and seizure of assets. So the lien, you've heard the term thrown around, liens, levies. They're not the same. A lien is a hold on your asset with your county or state. The IRS files a lien, letting them know that if you ever sell anything, the proceeds would be going to the IRS to pay the tax debt. So you cannot really sell the asset, but the asset would not be immediately taken from you because that's not a seizure of assets. That's the first step. And a lien can be filed on your record if you owe more than $25,000. And it's done at the discretion of the IRS. Sometimes when you start the resolution work early on, you address their concerns and the letters, you may get into an agreement of some kind, even if you owe more than $25,000, then IRS does not file a lien. So just throwing that out there. The next process is you being levied. The levies are bank levies, wage garnishment, where IRS would come to your bank and put a hold on the money. And then even in this case, you have 22 days to work it out with the IRS if there is any mitigating circumstances, so your assets are not taken forcefully. The next thing is wage garnishment. The IRS can garnish your wages, can garnish your Social Security payments, but it cannot garnish veterans' disability, though. And in the garnishment process, you would have to work an installment agreement with them or something, some other agreement that IRS gets paid. Then it's possible that they will remove the levy from your garnishment. The next process that IRS hardly uses anymore, it's an actual physical seizure of assets. If you have equity in an asset, IRS can actually force you to sell that asset and turn the proceeds over to the government. However, due to the public opinion, IRS has not made anybody to sell their home to pay the IRS taxes with those assets. However, it is an option, and the IRS can enforce that anytime. Even in some cases, though, they would suggest that you sell your house to pay the IRS debt. Consequences of ignoring those notices. If you ignore these notices. The consequences is that it'll prevent you from obtaining credit. It'll affect your sleep, your sanity, and it'll make life really difficult. A lot of clients that have come to my office, they sat in front of me and they were telling me how embarrassed they feel and how they feel like a second-class citizen. And you're dealing with the IRS, and IRS makes terms that they're easy to follow. And what I would suggest to my clients is, and anybody else watching this video, that once you start dealing with the IRS, you put the past debt into perspective, then you try to mitigate the circumstances forward, so you are getting out from underneath, and then you're staying compliant. Now, to recap, respond promptly, explore payment options, and if your tax debt is impossible to deal with by yourself, call someone like myself, a professional that can step on board and try to get this issue resolved. And then this is the end of this episode, and I hope it was informational in nature for whoever is listening to it. And see you in the next episode.